Is this just another way of saying the market is just so low and hasn't gone anywhere, so the potential for upside is substantial?
Yeah, this indicator is more of a technical indicator, right? So it's reflecting that the flows, the sentiment, the margin tradings, they are all at fairly bearish level, and liquidity is super abundant. The China yield has been going down, liquidity is very rich. So theoretically, there are good bases for a trading bounce, but it might just be a trading bounce if we don't get fundamental support.
So where is that support going to be coming from next, right? People are saying, look, it looks like positioning is so low right now that we're poised for some sort of sharp rebound in the second half. Are we really going to get it?
My worry is that we'll see these noises. Just like, year to date, January was up, February was down, March was up, April was down. We might continue to see that unless the policy stimulus really comes much higher, stronger than expected.
Meanwhile, what's the strategy amidst what I think you're outlining, just a range-bound market for the foreseeable future?
Yes, that's our view that, based on the current where things are going, it looks like it's a weak stimulus, weak economic recovery, and index level is also facing the challenges on the largest sector, which is the internet sector, which may see a structural derating. So our strategy is to say that index level, it might just be range trading, a lot of noises. You might as well ignore the short-term noises, focus on something more longer term, right? So from beginning of this year, we say barbell strategy, right? On one side is the defensive SOEs with high yield, low valuations, and heavy index weighting, so that's to hedge the index risk. But on the other side, focusing on mid-small cap future growth leaders. Some of the EVs, green stories have already outperformed. We also say look at import substitution story, and one of the big theme here could be AI.
Yes. So I was going to get to this long report that you guys came out. China's odyssey into the AI era.
Quite long.
Obviously, there's a lot of noise out there about, is it all hype? How real is this sort of revolution that we're about to see? How do you still play it in the Chinese market?
Yeah, I mean, after this report, the feedback from investors have a lot of skepticism as well. It's like, it looks like the high value added stuff are all in the US or maybe Taiwan, and China's only capturing the low value added hardware stuff, which is not interesting. And the questions on, with the chip ban, tech decoupling, is China ever going to get there, right? And these are all fair points, but in terms of will China ever get there, we probably won't know until probably like 5 or even 10 years later. But in the meanwhile, we think, this is something so big, so important, right? Even the likes of Pony Ma saying this could be once in 100-year type of opportunity. So for China, there's no other choices. They have to invest. They have to build up, right? And in the meantime, whether China will make it or not, in the meantime, there will be a lot of investment, capex that's done into this related areas, and there will be a lot of company beneficiaries. So stock market can still see a lot of winners, alpha generation from this trend.
Okay, yeah, I mean, how long's the report? 40 pages?
54, I think.
54? Did AI help you write this? That's not my question. I'm kidding. That's not my question. Well, my question is, how do we, this early on, if we know this is going to be a massive growth area, how do you distinguish the winners? Like, what criteria would you use to pick the horses?
We always say that early stage, especially mid-small caps, picking winners will be very difficult, right? 10 years ago, people say BAT, right? But in the following, in the past 10 years, even the top 3 internet companies had a very different trajectory in terms of share prices, at least. So our view is that find the right subsectors and pick probably just a basket of the top players in that subsector to diversify the risk. So it's more of a basket approach, finding the right subsector. So for example, semiconductor-related area, we don't know whether China can make the breakthrough on GPUs, but we know as long as China continue to invest, semiconductor equipment and material players will probably continue to benefit from the capex cycle in the near term. So domestic leaders in some of the special equipment will probably be the beneficiaries. Similarly, software side, there are companies that can benefit from the AI, right? And our forecast is next year, some of the companies will see, even some office software companies will see more material contribution from the AI side. So that subsector, we can pick the right winners. Also, like cybersecurity software, right? With the development of AI, that will be a big theme. Yeah, so our strategy is find a few top industry leaders in the right subsector.
Yeah, and what about in terms of AI adoption, right? You've done a few case studies, whether it's EVs, gaming. I mean, where are you seeing maybe the most potential for the best application of this technology now?
Yeah. So, previously, some of the consulting paper, like from PwC, were projecting China to be the biggest beneficiary of AI in terms of how much GDP gain China can benefit, right? Because China has a very large, diversified economy, and China's mobile internet penetration is very high. So that's the reason. And also, manufacturing is actually another area where, any productivity gain, better quality control, right, will help substantially lift China's GDP. So, the examples we were given were on the autonomous driving, drug discovery on the healthcare side, like some of the AI games, and also, in the industrial side. But actually, the application can be much broader, financial services, government-related. Those are also other top areas for AI adoption in China.